Well, I think my main New Year's resolution is to not hold preconceptions, or if I want to put a stronger word, sort of prejudices about economies and markets. And I think we've sort of seen quite a lot of that in recent years. Sort of a view that Europe's a basket case, the Euro's a basket case, and we've been proven wrong. And I think sort of my resolution is to keep an open mind about investment opportunities, about economies that look in trouble but could recover. I mean, let's just give you examples. Spain, 3 years ago, everyone thought it was doomed. It's been one of the fastest growing economies. Could Italy repeat what Spain did? I think the clear winners are the currencies of economies that have been engaging in QE, because as soon as it becomes clear that QE is ending, those currencies go up quite sharply. So we've already seen that to a certain extent with the euro, which is up about 20% off its lows in about a year. So that's a really big move as it became clear that ECB was going to back off accommodation. So perhaps the surprise again might be the yen. Can the BOJ really continue with this sort of emergency accommodation when the Japanese economy is not in a sort of basket case situation? So those are the winners. Well, the sort of corollary of that is that the bonds of the economies or the central banks that are ending QE underperform. So you could say German bond yields could go up, maybe JGB yields go up. The BOJ is targeting 10-year bond yields in Japan and keeping them at zero, and then they say, well, look, we no longer need to do this to the same extent. Well, clearly that's the risk. So they're the losers. I would actually ask the question the other way around. I think the causality would be from growth to populism. So I think my take is that as long as an economy is doing reasonably well, a sort of a violent populist uprising is unlikely. So that's why, for example, when we look at Italy and we say there's an election coming up, I'm saying, well, the economy is doing okay for Italy, so maybe that prevents a sort of a tail event. So I would apply the same logic to CEE. If the economy is doing well, people are generally happy. So I would say that the risks of sort of political tail events have sort of diminished somewhat, whilst the economy is sort of motoring along reasonably well. Well, going back to my previous comment about QE, I would say that you can find value in currencies by definition, because currencies are a relative value trade. There's always something one against the other, so something's always going to go up, something's going to go down. So I would say currencies offer some opportunities, currencies that have been held down by QE. I also think there's opportunities in certain real estate markets, the ones that have been depressed. So Greece, some of the peripheral European markets still offer some value in real estate. I would look at Portugal perhaps. Spain still has some upside, I think. And again, Italy, it could be the surprise. Well, I think we should be worried about, I think equities are expensive generally. One of the reasons they're expensive is because yields on all other assets are very, very low. So people sort of just gravitate to equities as a provider of yield. Valuations go up. I think if bond yields did go up another 0.5%, doesn't sound like a lot, but that could tip the balance, and people will say, well, hang on a minute, I want to own some bonds now, because I'm getting, let's say 3% in the US, and suddenly you think, well, with equities being expensive, that move could dent equities. So that to me is a worry. Not yet. But in a sense, that prevents bond yields then going up much further, because suddenly people will panic and say, well, look, there's a flow out into equities, and then that sort of the move down in equities causes people to move back into bonds. So I think the first attempt to really get bond yields up will fail because of that impact on risk assets. I think one question people will ask is, where is inflation? Has it appeared? Because that's one of the mysteries. Why is inflation? I mean, it has sort of picked up a little bit, but it's still very, very low for the low rates of unemployment and the reasonably good rates of growth. People say, where is that inflation? And one of the questions a year from now will be, has it appeared? If it hasn't appeared, why hasn't it appeared? There'll also be questions about growth. We've had synchronized growth. Can it continue? I think there is a risk that there is a little bit of a wobble, nothing major. And that'll be a sort of a question. Was it just a wobble, or is it, are we seeing growth slowing sustainably? Because I think there will be some sort of slowdown, minor slowdown this year.